Thank you, everybody. I'd like to thank you for coming today. I'm here to speak to you about a very compelling exploration story in the critical mineral space. Before we do, though, the usual disclaimers, and you can find all this information on our website if you'd like to see more. A quick overview about Accelerate and the board. Code AX8, 610 million shares on issue, 285 million options and performance right shares. We have about 2.5 in the bank at the end of the March quarter, and give or take, it's between 25 to 30 million market cap at the moment, depending on the share prices. On the 1st of May, it was 5 cents. It's now about 4.5. The board, it's a great board. Myself, I'm reasonably new. I only started this year. I've been working in the Pilbara for the last 10 years, is where I've been brought in to help bring up lithium projects into, hopefully into mining. I've previously been exploration manager for Novo Resources and Artemis Resources, and I was there during the early days of the Hemi discovery at De Grey. Along with that, we've got Richard Hill, very experienced geologist and corporate lawyer, and including that, then we've got a great board of corporate individuals of Yaxi Zan, Grant Mooney, and Mark Thompson, who only just joined at the beginning of the month. The big surprise, the big person that's a great value to this, or everyone's a great value, but one of the bigger values we have in this company is Kevin Joyce, exploration manager. He's former exploration manager for Regis Resources and Abra Mining, and was also the person who put together the Golomina lithium discovery. So he put the ground package together and made it, which is, I think, 5th largest lithium discovery on the planet. About 240 million tonnes, 1.38%. So when you get someone like Kevin saying this is great, then you've got to pay attention. So why invest in us? Well, currently we've got 85 square kilometres of prospective tenure in arguably Western Australia's hottest lithium playground, the area between Roebourne and Karratha. We've already made a high-grade pegmatite discovery at Princep with assays up to 2%, which we're hoping to be drilling by the end of this month. It's about 35 k's along strike from Azure. And we've also got a busy pipeline of exploration activities coming on in the next few weeks. We've got soil samples just been completed, so we're expecting to see assay results of that to tell us what else to be following up on. We've got the drilling that's about to start, and we've also got exposure to manganese, which is a very high grade, direct ship, woody style mineralisation, and we've also got a gold project at a Q. So a quick overview of the project area. Looking at the map, you can see these red dots all represent all the pegmatites that have been found in the area in the last 12 months since Azure made their incredible discovery. Of that, the white dots represent the known mineralisation occurrences where it's plus 1% lithium. This here for us is a transformational acquisition. We put it together in October. We brought in the team to build it up. It's only 15 kilometres from Karratha, which is one of the premium mining jurisdictions in Western Australia, of all the services you could ever want. And yeah, we're part of an exclusive land package over 40 kilometres worth of strike. So Princeps, what is it? It's 2 sub-parallel trending pegmatite zones. Each one's between 1.8 and 2 kilometres. The northern zone we have is 1.8 kilometres so far of continual strike, with 1.5 kilometres of known mineralisation, at least from rock samples, with assays up to 1.6, 1.8%. And the southern pegmatite zone consists of a series of sheared dikes with widths up to 50 metres and mineralisation over 2%. What is interesting is that, let me just go back, is that the Kobe trend, which is a known lithium trend that's been picked up by Green Tech, and Artemis, goes for 7 kilometres. It pulls into our ground. When it pulls into our ground, it actually pulls into the Regal Thrust, which is a regional 90-kilometre structure, then folds back around on itself. And when it folds around, what we do see that this northern pegmatite trend here, with the pink is actually the mapped pegmatites we're seeing at surface, suddenly becomes structurally thickened. So we end up with 40 to 60 metres of actual true thick width at surface. And this is giving us amazing hope for the future when we go in and actually drill it in the near future. So when we got out there, one of the things we wanted to do is look at the continuity of mineralisation. At the beginning of the year, we went out over the main northern pegmatite, where there's 650 metres worth of strike, averaging over 60 metres. We went through and did 5 metre increments on 200 metre spaced lines. What this data told us is that pretty well the whole system's mineralised. Most of the samples were above 0.5% lithium oxide, sorry, and where we were seeing below 0.1% lithium was just on the absolute margin. So at this point in time, we now know that across this system, it's 40 to 60 metres wide, it's all mineralised, and we're getting really very excited. So, the drill program. The drill program is expected to start the next few weeks. We've already got the native title agreement signed off. Programs of works, the Department of Mines have been signed and authorised. Ethnographic survey has been completed, and we've just had to go back and just finish off a little bit of archaeology, which is happening at the moment, just to have that cleared. And we've been told that we'll get the clearances for that, or the preliminary report 7 days after that. They're on site at the moment, so we're expecting in the next 2 weeks to be ready to rock and roll and start actually drilling. We're going to start on the northern pegmatite, where we know we've got the best widths and the best height grade at this point in time. And we can go in there and we're going to start systematically drilling on 80-metre spaced lines. We're going to start with getting straight on the top of the mineralisation at surface, pull back, get 40, 50 metres under, pull back, get 100 metres under, and we're going to do that the whole way. We're also going to make sure it's quite dynamic so we can go through and actually modify the program as needed. We're also going to put a bit of time into the southern zone once we've done the main northern pegmatite drilling. One of the things that is interesting is that with the regal thrust here, we actually have a syncline, and the question is, do we actually have a feeder system that's running through there that's running along some of the planar structures? We think there could be, and we're going to also make sure we've got some drill holes that scissor so we can cross-check that theory to see if there's any feeders going through there in what we call the kill. For those of you who want to know what the ore body looks like, this is it. Spodumene under UV light, or UV light has an orange to red reflectance, and this is an example of what we're collecting at surface. So what else are we doing? Where's the news flow going in terms of the exploration in this part of the world? We've got 2 main areas. So there's effectively 2 mineralised trends that have been picked up to date. One that starts with the Andover project with Azure, and it goes all the way through the Osborne discovery. Then we sort of have the Princeps and Kobe through to Mount Marie, which are all new discoveries. We've just recently completed soils in the last week, and they're with the labs now being analysed. And what we want to do is actually see is what do we have new targets to follow up on. We've done Princeps so we can see what the baseline readings look like, and now we've also got the new targets here at 6 Mile and about Shoal East, where we also have lots of known mapped pegmatites. We just need to see where do we sampling correctly. As well as the lithium, we've got Woody was brought into the company about 2 years ago. It's a great project. It's basically a structural repeat and geology repeat of the Woody system. There's 3 main projects area: Woody North, Mount Sydney, and Ripon Hills. The main Woody, where we've been doing all the work to date, is only 30 kilometres from the highway, 240 kilometres from the port, and altogether is 570 kilometres of prospective tenure. We went out there when we grabbed the project. We were very quickly able to show that we do have Woody high-grade style mineralisation. What we normally see is you get the caps on surface, but then we also have the taproot system that goes down, and we've managed to show that now in our drilling that we do. We've gone out, we've also been able to convert a lot of the mineralisation that we've started to see into mineral resources. We did do a modest resource last year just to get everybody in or just to do what we said we're going to do. And we've put together a higher grade 1.2 at 19.1%, resource of 15% lower cutoff, with an exploration target of 5.3 to 10.7 million tonnes. So this is quite exceptional for the target. We're going back here this year to finish off with some native title surveys so we can get back out there and do the drilling and add the value to the project that it actually needs. So quickly, near-term value catalysts, imminent drilling of the project. We're going to be drilling Princeps before the end of this month is finished. That's going to lead to rapid progression of first drill hole to resource to mining licence. We've got a strong pipeline of other exploration ranging in the Karratha area from the soils programs, and that's going to lead us hopefully to some new discoveries. And then we also have the near-term manganese exploration target of 5.3 to 10.7. Thank you.
Thanks all. Thanks Stu and Jackson and Chrissy and crew for another fantastic conference. Really well run. Always good to catch up with everybody. So I'm here to present the SEPA story. standard disclaimer, disclosures, etc. So SEPA, outstanding opportunity. We've got a long history, first started in 1987, so there's a lot of people around who've either had SEPA shares, worked for SEPA or had SEPA projects. Yet we've got a new management team. I started in October and my GO started in January and just recently. So experienced, diverse commodity exposure and all highly motivated. Our projects are all large scale. We don't have any small scale, little postage stamps, all good quality geology with really good concepts. Busy year ahead, starting off with some auger drilling, then gravity followed up by some RC. And we're also using the state of the current market. As we know, it's not that buoyant, but looking to refine the portfolio via acquisitions and divestments as well as joint ventures. So we're looking at for opportunities. Quick corporate snapshot. Key numbers really to look at. Market cap of 4.1 with 2.1 cash, as well as 600,000 in Aura shares. So we've got liquids of 2.7 million, which means an EV of just 1.4 million, which when you have a look at the quality of the assets, fantastic upside. Great board and management team. Obviously myself, Craig McGowan, one of those gentlemen investment bankers. John Ford, for those that know, he's wandering around the conference here, fantastic, tapped into the market, Laurel Resources Fund, as well as Rick Yates, old school gentleman, boffin geologist that adds a lot of value. So a really good mix of skills and experience on the board. And lastly, but definitely not least, Anna Price, who joined in January, fantastic experience in Oman as well as Sandfire, and has added a lot of value in the short space of time she's been on board. So just quickly, 5 major projects, all excellent locations, large scale, and a range of different commodities. All the projects are 100% owned by SEPA, except for our Barbed Wire Terrace, which is a 50-50 JV with Buru Energy. First cab off the rank is Skeleton Rocks. Outstanding location, 4 hours drive from Perth, assuming you don't speed, and almost 700 square kilometres, so it's a decent land package. It's near Southern Cross in the WA goldfields. Greenstones, lots of structures, really interesting part of the world. It is in farming country, but we've got a really good relationship with all the farmers, and we've got all the access agreements that we need to get on ground. It's prospective for multiple different commodities, gold, nickel, as well as lithium. So even though it's relatively close to Perth, it actually hasn't had a lot of work done on it. The small amount that has been done, there's been anomalous lithium identified, as well as some nickel in drill intercepts. We've done a lot of work targeting, so now all we need to do is get out on the ground and start putting that to use. So it'll be first cab off the rank in terms of on-ground activities, and we'll be looking to do auger drilling there, and depending on how that goes, followed up with air core and RC later on. Patterson North, absolutely outstanding address, over 1,000 square kilometres in the Patterson region of WA. It's near Rio Tinto's Winu. Antipa has Calibre and Magnum. It's north of Telfer. We're surrounded to the north by FMG and to the south by Rio and Antipa. We've got multiple different targets that we need to test on this ground. And the other thing too is that all the deposits in this part of the world, they're all slightly different, so you can't have one fixed model to look at it. You need to take the blinkers off. There's only been modest exploration done to date in terms of on ground. We've done some air core drilling as well as a bit of RC and a bit of diamond. But we've done a lot of geophysics as well as a lot more targeting. So we want to, again, like Skeleton Rocks, put all of that work to date that's been done, and we're going to look to get up there towards the end of the year and start putting some holes into this thing. Barbed Wire Terrace, this is our JV with Buru Energy. Really fascinating concept. The Leonard Shelf lead zinc mineralisation, which you can see there, the Kajabat, Palara, etc. A lot of decent size lead zinc mineralisation. That was initially found because it pretty much stuck out of the ground. It was pretty shallow. We're looking on the other side of the Fitzroy Trough. there's the bounding Fenton Fault, which we think is the other side of the Fitzroy Trough to the Pinnacle Fault. The difference being that there's 100 to 200 metres of cover, so these things don't stick out of the ground. So we've been doing a lot of geophysics, and we're tapping into Buru's knowledge base using seismic data, and we've also got a PhD student who's doing sort of fluid flow and isotope work to assess this, but we're really quite optimistic about what this could be. We'll be doing some ground gravity on this later on this year with a view to identifying targets and doing some follow-up drilling probably next year. And this just shows some of the geophysics that we've done. That's the AGG, and you can see up there where we're going to do the detailed gravity. We did maiden drilling, diamond drilling. We did 4 holes in 2022 and very much proved the concept that we think this is very much a valid target. We had anomalous lead and zinc in a number of the holes, so we're pretty optimistic about what this could potentially be. Wolf Basin, another really interesting concept play. Again, large prospective tenement package, almost 800 square k's of largely underexplored Proterozoic basin. It's prospective for large-scale lead zinc deposits. And we've got over 80 kilometres of the right stratigraphy that we need to test. As you can see from that coloured picture on there, we've got a lot of multi-layered anomalism from soil sampling, and we need to get up there and basically look at that in a little bit more detail and start pinging some holes into it. And last but not least, we've got our Warralong Gold Project, large-scale structure, over 1,000 kilometres in the Pilbara. It covers 50 kilometres of the Lalalook Shear, and as you can see, that parallels the Tabba Tabba Shear, which is obviously host to multiple different large-scale mineral systems. It's been largely untested, really limited to soils and a little bit of air core, so we need to do a little bit more work on this. So to keep it nice and simple, highly leveraged to exploration success with an EV of less than 1.5 mil. Given the size and the quality of the projects that we've got, we think there's huge amount of upside. We don't have small-scale postage stamps. They're large, quality projects with outstanding geology. We're in a pretty good financial position, better than most in the sector at the moment, given the tough nature of it, with 2.7 million in liquids. We've got a busy year ahead, starting off with auger drilling at Skeleton Rocks, then we'll be doing the geophysics at Barbed Wire Terrace, and followed up by aiming to drill at Patterson North towards the end of the year. And as I touched on before, we're also using this opportunity in the market to assess joint ventures and acquisitions as well as divestments. So, look, it's a busy year ahead. There's a lot going on, but you also need to be smart and use this time valuable to add value to the company. So, and that's it for SEPA. Thank you very much.
Thank you, Chrissy. Thank you, Vertical Events, and thank you everyone for listening. This is the Brightstar Resources story. We are a West Australian-focused gold producer, developer, and explorer. We are currently going through a merger process with a private gold mining company called Linden Gold. They are the current operators of the underground Second Fortune gold mine and also the owners of the Jasper Hills development stage gold project. And Brightstar owns the Laverton and Menzies gold projects. So the merger process, which is underway, which completes next month, is truly synergistic for us. It's the opportunity to put together two really synergistic and complementary management teams and projects and assets together. So for us, post this merger completion, we'll emerge with nearly 1.5 million ounces of gold resources. All of those resources are on granted mining leases. More than half of them are in measured and indicated status. We'll have an operating mine, processing infrastructure on care and maintenance, and seeking to get through towards final investment decision next year on the development of a number of our projects. So just touching on the map here, this is Brightstar's Menzies hub down here. We have just under 600,000 ounces at Menzies. Menzies is the site of a recent successful mining joint venture that we did. We did a small-scale mining project there called Selkirk Deposit, which was processed through Gwalia, through Genesis's mill just north of us. That was highly successful. That banked Brightstar $6.5 million, which actually hit the accounts last week. So a really interesting proof of concept that we can take some of those resources in Menzies through to production and generate substantial capital for the business. The other arm to the Brightstar business, as it currently stands, is our Laverton hub. So just over 500,000 ounces in that part of the world. We have a processing plant there just south of Laverton, currently on care and maintenance. So this merger for us really gives us that critical mass in the Laverton hub to turn our plant back on and be a substantial gold producer in our own right. Just touching on the pro forma, so post-merger corporate overview, on today's price about an $80 million market cap. We do have $20 million cash in the bank, no debt, and currently producing and hedge-free. So we have a fantastic balance sheet. We've got the capital to actually execute on our strategies, add lots of value with the drill bit, take these projects into production and generate substantial value for our shareholders. Touching on the register, we do have a number of large institutional shareholders, Collins Street, Lion Selection, Bazza amongst others. I own nearly a third of the company. We've then got St Barbara, who are our largest individual shareholder post this merger. They'll emerge with about 12%. So a really tightly held register and really supportive shareholders that are there for the journey that we're on, which is building a genuine mid-tier gold company. Just touching on the board and management, really fortunate to secure the services of Richard Crooks as chairman, who joins us next month at the completion of the merger. For those of you who don't know, Richard is a very well credentialed and regarded mining professional, ex-geologist, but long career in investment banking for EMR and Macquarie. Was recently the chairman of Lithium Power, LPI, which was bought only a few weeks ago. So great chairman to have on board. From the rest of the board, we've got Andrew Rich coming across from Linden Gold. Andrew's a mining engineer with 15 to 20 years experience. He brought Second Fortune mine out of care and maintenance into production, has started and run a number of mines in his career, so he's a fantastic addition to our team. He's done a really great job with Linden Gold, and we're really excited to have Andrew and his team kind of join the bigger Brightstar family. Rounding out the rest of the board, Ashley Fraser is a very experienced mining contractor from private businesses, very successful. John O'Downs is a geologist and an MD of another gold mining company, Kaiser Reef, and Dean Valver, Chief Operating Officer, long career in mining, geologist and an engineer for all his sins, but 20 years mining experience, built mines, run mines, and a great credit to our team. This is the strategic rationale for the merger with Linden. It really speaks to the focus of our business. It's really taking things that are currently in the ground and making them mineable ounces. At the moment, in my view, one of the greatest arbitrage opportunities is seeing some of the values placed on exploration ounces in the ground and trying to take those towards production opportunities. If you can take an ounce that's valued at $10 or $20 per ounce in the ground as an explorer and move that towards production, you see a significant re-rating. And we can see it at the moment in the current equities. Everyone here in this room in this conference would know that the equity markets for junior explorers is woeful, and it's been tough for a long time and might continue to stay tough. However, given the gold price, all the gold producers are absolutely ripping. So there's this huge divorce between the current producers and the explorers, and it's something that we're seeking to bridge and something that we've successfully kind of navigated, transitioning from an explorer into a producer, and now we're trying to grow that production base. The merger does create good cash flow for our business. The Second Fortune mine will be producing 15 to 20,000 ounces per annum. The assets that we get, in addition to ours, gives us that critical mass to push the button on restarting our mill and really unlocks further synergies both within the asset bases and the management teams. This is just a zooming in on our Laverton hub. As you can see, in the centre of this radius here is our processing infrastructure. That's key to it all. I would like to see in a year or two's time the scenario in which we have material from Corktree Well coming south to our plant, Jasper Hills as an open pit and an underground producing material for our plant, and the operating Second Fortune mine operating. And if we can deliver that with a refurbished plant, that is a substantial gold producer. And there's a lot of value to unlock here. You know, the history of both Linden and also Brightstar's corporate history has meant that there's very limited exploration through this part of the world, through this package of ground, and that's a huge opportunity for us. So we've actually just embarked on a 30,000 metre drill program across the portfolio, both Brightstar and Linden's assets, RC and diamond drilling. Really excited, lots infill drilling for some reserve conversion. There's greenfields exploration there. We're trying to grow the asset base, grow the resources, and take these assets towards production. You can see there where the projects are and the distances. We've got a great logistics network through there. The haul roads are excellent. These are things we don't have to spend money on. You can't sell a haul road, but I don't have to spend the money to build one. We've got a permitted tailings dam. We've got things there that are actually truly valuable to our business and are tangible, and that gives us a huge head start on funding this into production and getting into production from a timetable perspective. The diversification of ore sources is important. We do have a number of different ore sources and opportunities, so we are fortunate that we can schedule things appropriately to stagger capital requirements, grade profile. We can blend open pit with underground ore. We can get oxide material with fresh. We do have a lot of flexibility and optionality that's given to us by our resources. This is a busy slide, and I'll talk to it quickly. This is essentially the output from the 2 scoping studies we've got in the market. So you can actually dive in and see CapEx, OpEx, production rates, NPVs, IRRs, etc. On both of these studies, the Brightstar study was released in September of last year, and the Jasper Hill study was done only a few weeks ago. At current spot prices, they both have IRRs well over 100%, in the multiples of hundreds of percents. So clearly very profitable, very lucrative returns for shareholders if we can get these into production. But in short, to distill it down, what it showed is that we can produce 322,000 ounces over 8 years from our Brightstar assets, and 140,000 ounces from Jasper Hills over 4 years. The current pre-feasibility study that's underway will seek to compress that. So if we can bring forward some of these ounces in the production profile, you'll see a commensurate increase in the actual amount of ounces that we can produce. Those on alone produce nearly 100,000 ounces, cash flows of more than $400 million, well below current spot, produces nearly 500,000 ounces over a number of years. So a fantastic asset that we can develop. And for us, the most important thing is the capital requirements are very low. In terms of putting those 2 projects into production, the capital costs are about $34 million. So for us, we're not come a huge development capital hurdle. We can actually fund this into production ourselves and organically fund a lot of what we're trying to do. I've touched on the board and management here, so I'll just skip over this one. This is the why. This is what we're trying to do. This is the valuations for the peers that we see them on the ASX. These are the small scale producers. You can see them through here. What this chart is showing is their value per production ounce. So on average, these producers are valued at $5,000 in enterprise value per production ounce. So if we can be a 100,000 ounce producer and trade on these multiples that our peers trade on, that's a $500 million company. And we're currently a $60 million enterprise value, and we can fund this into production. So for me, that's the why, that's what we're doing, what we're trying to do, that's the return for shareholders, that's the business case in a nutshell. That's the one slide that we need. That's all we're about. I'm about to get yelled at. I've got one more slide, Chrissy. This is a Gantt chart just on what we're doing for the next 2 years. Very busy. There's lots of information in our presentation that's released on the ASX. Feel free to come past the booth and chat to the team. We've got our GM of Geology and our COO here with me, and there's lots to do. So thank you very much.
Thanks, Chrissy, and thanks for coming in to listen to the story of Azra Minerals. Azra Minerals is a junior explorer in the WA goldfields of Western Australia, a great location. Having worked around the world for a lot of my career, but having sort of gone to kindergarten as a geologist in this region, it's great to come home and work in your own back garden. This is the place where big discoveries are made and companies are made. Our projects are centred between Leonora up through here. If I just press the right star, we're up at Leonora, down through to Norseman. It's a mixture of predominantly gold with critical minerals portfolio on the side. And a great segue from Brightstar, that's where we're heading. This region up through here is fantastic for mid-tier juniors to make it all the way through to production if they can find the ounces. We have a portfolio, keep pressing the forwards button. We have a portfolio, we have a great portfolio. I can't keep saying that enough, can I? If I get that. Of about 1,300 square kilometres in WA in this belt. Some are under option, so we're assessing them for a couple of years to see through a value, but the gold is solid. We own the solid gold resources in this ground. We're up, as I say, up around the Leonora region, which is where Genesis and Red 5 dominate in the production space. They made their life here. Both of them were searching overseas. Genesis were in South America, and they came back in 2015 and bought the Ulysses project, which is down here at just near us at Kukaini. At that stage, Genesis's market cap was about $2.7 million. They're now $2 billion. That's what's possible in Western Australia with the right geology, the right team, and the right enthusiasm. ASRA is really enthusiastic. We've got a great team working this ground. That's a similar slide. I'll jump through that. There are other projects in this area. We also own the Tarmoola pastoral lease, which is up through here, which encompasses Red 5's King of the Hills operations, as well as Aeris, and to the north of us, Thunderbox. Obviously, Genesis dominate in the Leonora region and have the biggest mill, or one of the biggest mills, along with Red 5. So we're adjacent to not the head frames, but the declines of these big miners. They're not doing a lot of exploration. We want to be the explorer of choice in this region. And as I'll point out in the slides ahead, we've got a lot of targets which we haven't yet uncovered. There's a whole bunch of them there. This is our Mount Sterling project, which is up just north of Leonora. This is King of the Hills here. And all of these are what we've identified over the last 12 months as our priority targets for drilling. While we've been working on the clay-hosted rare earths at Itria, we've also been doing all the data analysis on the gold host. So there's some big targets there. And on the next slide, you'll see why, because of the geology. So a lot of gold targets, and we have a base, and we own the farm here as well. As you can see, you're in the right jurisdiction. As I said, we all grew up as West Australian geologists in this region. We understand the geology really well, and it's about being in the right fault systems that carry deep-seated gold and being in granite greenstone contacts. We've got all of that in our package at Mount Sterling, and a lot of targets to go after. These ore bodies are very deep. Gwalia is down 2 kilometres, and Red 5 will probably end up down there as well. Just a quick touch on our clay-hosted rare earth deposit. There's a couple of unique things about what we found here. One is the high proportion of heavies, which is unique. That's about the highest that you'll get in clay-hosted rare earths. And also the scandium. We've got a high scandium content, and there are a lot of scandium projects now coming to fruition. So we've probably got a rare earth clay-hosted deposit really close to surface. It comes up really close to surface through here. It's very consistent within a scandium deposit in a gold territory. It's on the same ground as our gold deposit, so it's not costing us anything to have there. We discovered it by chance, and it will have its time in the sun, I'm sure. We've got a target on that of 300 million tonnes. That's a little bit of information there on scandium. Back to our southern hub quickly. We've been picking up a critical minerals portfolio down in the southern hub, south of Kalgoorlie, which again will have its time in the sun again. Other people are doing a lot of good work down through here. And I think with MinRes recently buying the plant at the old Poseidon Nickel project, you've also got potential processing facilities down here as well. So as well as us looking in the north at gold exploration and developing resources that will feed into other people's mills, down through here, MinRes are providing the opportunity for lithium deposits that aren't necessarily massive to feed into a hub. So we're continuing to do geochemistry in our work down through here, which is close to Covalence Earl Grey, and out through here at Bald Hill, we've got a large tenement out through here which we're doing geochemistry to identify those targets. 4 minutes I've got left. Just quickly, our catalysts, I guess, are around discovery. So it's going to be all about the drill bit. We've got programs to be drilling in the gold space for the back half of this year. That's where we'll get value into our stock. We think we're undervalued like every junior, but drilling for gold in a great jurisdiction is what we want to be doing for the rest of this year. A very small board. That's just Paul Summers is here somewhere, my executive chairman, and it's great to work with an executive chairman to share the load. And Paul's been working on a lot of good gold aggregation opportunities in this region, and has been with the company for a long time and knows all the people in this area. Matt Longworth is also a non-executive director of us, and I have one full-time exploration manager who's registered. He's done the exam, and it's really important to have that behind you when you're going forward with programs of work and getting drill bits on the ground, which is what we intend to do. Outside of that, we generally engage consultants and contractors as needed. We've got a good network in Perth of people that are really enthusiastic as well, that know this area. Even though there's been a lot of work done here, there hasn't been a lot of deep work or detail work to discover these million-ounce deposits. That's what we're going after. A little bit on the corporate stuff there, which you can all see online. We think we've sort of got a bit of traction since the last quarter, and we hope to keep going upwards and onwards from there. And we'd like to have people come on board and join. So if you like gold junior explorers in a great jurisdiction with a great team, come and learn more about ASRA.
Chrissy, thank you. No, look, our story is, as the name suggests, Meeka Metals. It's a story that centres on in and around Meekatharra, and what you can see on the slide there, that's our gold project, our Murchison Gold project, and that's really what we are working to get back into production, and it's a key focus of the company. And as the slide suggests, the title of the presentation, Development Ready 2024, and that involves having this project permitted and funded and re-establishing operations on site this year, and that's key to what we want to do. In terms of the project itself, we released a pre-feasibility study mid last year, in July of last year, that outlined a robust production plan, roughly 9 years of production. We're in the process of completing a DFS that will get out in the next couple of weeks. The numbers that we expect out of that DFS are very similar to what we see in the pre-feasibility study, barring the capital requirement to get into production, a significantly lower capital hurdle, and we'll get that out in the next couple of weeks. But what that delivers, and what the PFS delivered, is undiscounted free cash flow in the order of $500 million at spot gold price. And when you compare that to our market cap of in and around $40 million, there's a lot of upside to be had in terms of company valuation. We've got fantastic infrastructure, access to infrastructure in the Murchison, and we believe compelling targets for resource growth outside of our existing resource, and I'll talk a bit about those. From a corporate perspective, the important number on our cap structure table there is that EV, and if you look at that $37 million enterprise value and divide that by the 1.2 million ounces of gold that we've got in resource at a reasonably high 3 grams per tonne, it compares favourably to a lot of our peers. But if you divide that EV by the resource ounce base, you're looking at about $30 an ounce, which we feel gives us lots of room to move higher. We don't feel we're fully valued. We feel there's lots of room and lots of room to move higher. And if you look at recent transactions in the gold space, mid-cap and senior producers acquiring junior explorers and developers, you're looking at $200 per resource ounce and above. So there's lots of room to move higher on that metric. From a corporate perspective, our board, we're led by a very experienced chairman, Paul Chapman. He was the founding shareholder and founding chairman of Silver Lake Resources. He's got that track record of and experience of doing it before. He built Silver Lake into a 250,000 ounce producer, plus $1 billion market cap. He's done it before. The rest of our board, Roger and Paul, both have track records of delivering and creating value in the resources space. Both have been involved in that space for a long time and have delivered significant value appreciation to shareholders of the relevant companies that they're involved with, and they intend to do it here with Meeka Metals as well. So we've got an experienced board, and what we've done in the last 12 months is we've brought on board an execution team, so a team that's done it before from a management perspective. We've got there Tony Brazier, our CFO. He came on board from Ora Banda late last year. Ora Banda, obviously a growing gold producer in Western Australia. Chris Davidson, his last role was building Rothsay's gold mine for Silver Lake Resources, so he's got recent development experience. Pretty much exactly what we want to do at our Murchison Gold project is he's been responsible for doing that over the last 18 months. James Lawrence just came out of Red 5, again, the right experience, geology manager there, getting that project up and running, and Alan Tandy, his previous role was getting Bellevue permitted, so Bellevue Gold's project permitted. So we've got not only an experienced board that's delivered significant growth and value appreciation in the space, but we've got a management team that we can go and execute with now, and that's really the key for us. Our Murchison Gold project, as the name suggests, in the Murchison region, about 50 k's north of Meekatharra. We've got a high-grade resource, 3 grams per tonne, as I said, compares very favourably to our peer group. We've got significant opportunity, we feel, to expand that through drilling, and that's something we'll do once we get back into production and get into cash flow. The focus for the next 12 months is getting this project into cash flow, and importantly from that perspective, 100% of our resource and reserves sits on mining leases, and that means it's quicker for us to move from where we are now into production, and using the established and existing infrastructure reduces the capital burden to do that. Now, what we're looking at here is the table that shows the economic outcomes from our pre-feasibility study, and you'll see there at a $3,000 an ounce gold price, this project produces $521 million of pre-tax free cash flow. At $3,500 an ounce, so spot price today, you can go and add another $250 odd million to that number. From an economic perspective, we don't see the numbers materially different from that in our DFS that we'll release in the next couple of weeks. The main difference will be that capital burden. You know, we think that the number's likely to be in the order of $40 to $45 million of startup capital, and that's capital to get the plant up and running, back up and running, as well as all of the other infrastructure and working capital. So the key focus for us is getting that funding in place, utilise existing infrastructure to reduce the capital requirement, and it'll be a focused high-grade production plan using that existing mill and focused on accelerating cash flow, getting the highest grade into the plant, and getting things getting back to or paying off the debt as quickly as possible. Now, I talk about the existing infrastructure. That's what's in place now. We've got mill workshop, store building, the powerhouse is there. That gives us a significant advantage in terms of what we need to do, both in terms of the speed to get back up and running and the cost to get back up and running. The infrastructure was commissioned in 2013 and it was put on care and maintenance in 2017. So it was operated for a very short period of time. It's very new infrastructure in relative terms, and it's in very good condition, and that reduces our capital requirement. And we're looking at options to increase the production, the throughput through that plant. If we replace like for like, that plant does about 500,000 tonnes a year in oxide. We're looking at options to increase the size or the throughput of that plant with the installation of a larger 750 kilowatt mill. So what you're looking at on the slide there is what we need to replace. We need to replace the secondary crusher, the cone crusher in there, repair a couple of the conveyors. There's the cyclone bank, new gold room, and a cyanide tank. And then what we're also doing is we're putting in a bigger mill, some additional leach tanks to give us some more residence time, and that gets the throughput over and above that capacity that we would achieve if we were replaced like for like with the original milling infrastructure. So over that 500,000 tonne a year of oxide material. In terms of site layout, this is what we intend to develop. We've got the plant and the underground mine at Andy Well. There'll be a 20-kilometre haul road that we need to build over the next 6 months down to our open pit mining area at Turnberry and St Anne's. There's 730,000 ounces in resource between these two deposits, never been mined, shallow oxide, and that'll just we'll put that on trucks and shoot that up the haul road up to the processing plant at Andy Well. So it's very simple, very straightforward. There's not a lot of distance between the plant and the pits. Initially, it'll be mining at Turnberry and St Anne's, that open pit feed, low-cost mining, oxide, good grade, good recovery. Turnberry averages about 1,600 ounces per vertical metre in that top 200 metres. It drops off from there, but that we believe is a function of drilling. With more drilling, we think that'll grow. St Anne's, again, very high grade from an oxide open pit perspective. That gives us that sugar hit initially to get things going from a cash flow perspective. And really the last 12 months we've been focused on upgrading that resource, getting the metres into that shallow part of the resource, give us more confidence in the geology there, and that's key to getting the funding in place. From a underground mining perspective, once we've got the pits up and running, we'll be transitioning to getting the underground set up. Pits are very low risk technically. Undergrounds, again, this is a restart, not a new underground, so we've got a lot of geological information, a lot of geotech information, a good handle on how to operate this thing. Some of the guys that we work with have worked at this site when it was in operation. It was put on care and maintenance in 2018, so it's been in late 2017, sorry, so it hasn't been parked up for a long time, and this will be an easy restart for us. Very high grade, you can see that from the drilling. This is all outside of the existing mining areas, typical Andy Well style mineralisation, and lots of room to grow. None of these resources are closed out at depth, so lots of opportunity to grow the resource, as with this greenstone belt. So outside of Turnberry and St Anne's, minimal drilling, lots of opportunity when we get into cash flow, and that'll be the key to it. Get into cash flow, get the exploration growing, grow the resource, grow the production plan. And if I can leave you with 3 things that we're going to do in the next 3 months, key is getting the DFS out in the next couple of weeks. In May, final development approval. We're waiting for the final permitting from the department. We expect that this quarter, so by the end of June. And then finally, Murchison Gold Project debt funding. We're running a process now. We expect to have the debt in place to get this development underway by July of this year. So those are the three key catalysts for value for us, and then it's just getting the gold out and getting into cash flow. So thank you very much. Thank you, Chrissy.
Thanks for that very kind introduction, Chrissy. It's also very gratifying when you step up here in front of an audience that actually has a lot of faces in it, so I applaud everyone for actually staying to this time slot. It's much appreciated. Yes, Adabel Resources, future energy minerals. We've got both uranium and nickel in our portfolio, but I'll dedicate most of the discussions and narrative today towards the uranium. Chrissy's given us the introduction with regards to the dynamics that is happening in the uranium market, which I think has actually been a very, very positive and strengthening position that we haven't seen for some time. I've got the feeling, and I think a lot of other people have, that this is actually something that's more robust, and it's showing those signs of continuity. The narrative in the political spectrum is also actually focusing on what's important, I think, for not only Australia, but more particularly, the opportunity for Australia to benefit from the wealth of resources it's got in the uranium resources in Australia. We can explore for it, we just can't mine it in all jurisdictions. There is a couple of lost decades that we're facing here, which means that the exploration development has been sadly lacking in this space. The beauty of this is that there's going to be this persistent supply gap, which we can actually start to feed into, along with a number of our colleagues that we see in South Australia. And that's the other beauty. We're in a Tier 1 jurisdiction. We've got people that have actually gone before us. They are in production, and there are big boys there, and they are looking at this area closely. Where are we? We're about 600 k's north of Adelaide. We've assembled, I think, a pretty tasty package when it comes to a potential. As I've said, it's a uranium jurisdiction that has already been identified through the actions and activities of Heathgate with Beverley and Beverley 4 Mole. More recently, you've got Boss actually completing their first production, and I think actually today they've mentioned their first sales, which is also gratifying to see. They're not the only people there, but they're actually sort of leading a bit of a path for us, which I think will actually serve us very, very well going forward. As we've mentioned there, we've consolidated the land package. Now, we haven't done this indiscriminately. We've been very, very selective as to those areas that we want, and I'll tell you why we think we've actually done that, a reasonable job on that. As you can see from this slide, there really are no vacancies left in this province. You've got parties like TriStar and Heathgate, which unfortunately, given their status as private companies, is really quite opaque. A lot of the information that we see will only come out through our ASX peers. As you can see there, we've got Orpheus in the mix, but essentially now with those new acquisitions, which is Coast and Killanova, Adabel has a very, very significant package there. So most of the activities in the past has been on the eastern side of the Flinders Ranges. What we're dedicating our activities and our attention towards is more to the north and more to this western outwash. As you can see in those blue outlines, Heathgate's got a very dominant position there. We just actually extended a little bit further west. So those strategic acquisitions that we've spoken about has enabled us now to actually make reference to the fact that we bought the Hook, and the Hook is basically that black outline up here. So the beauty of that is that we see that this opportunity is the outwash through here. The stars represent those uranium occurrences. There hasn't been a lot of exploration here. Effectively, Adabel led the way and actually had some encounters up at Lake Surprise. But the beauty of actually including in our mix something like an opportunity called McDonald Creek means that this area is actually, I would consider, more brownfields. So they've actually drilled this and they've actually had encounters. And more particularly, we think that they're actually onto a structure known as the roll front. And these early term indicators means that we know where to go. And this is what's happened. They've done some drilling out there. They realise that there's a nice little structure sitting up here. They think it extends down here. And when I'm talking they, two parties that we bought this off, Terry Topping and Andy Rust, have essentially taken all of their vend just about exclusively in paper. I think that's a strong endorsement as to what we're doing and where we're taking it. What we've also got here is the program that has enabled us to utilise the open file in SARIG, which means that much of this information that we've been able to determine where the paleo channels are have effectively been available to us free of charge. What we've tried to do here is we tried to trace out those areas which are existing station tracks, which enable us to get on the ground and do some early term investigations. And those early term investigations which you've just completed includes gravity and spectrometer readings, and more particularly soils. Now, if I explain the soils, I don't want to get bogged down in the technicalities of it, but we're using a very, very low threshold indicator of uranium and the lead that decays from it. So what we're seeing is that if it is in the system, we should be able to pick up with very, very small sampling using 200 grams using a particular teraleach. Now, this has been demonstrated to be very, very effective over in the US. We've actually just brought that technology over here. So we see the outcomes of that is that we'll find out where the paleo channels are, we'll find out where the best bits are in those paleo channels, which of them are fertile, and then we'll actually start doing probably a few more soils and then getting into understanding what a drilling program might look like. Again, this is more a schematic or representation of what we're likely to see in a usually deposited roll front uranium opportunity. It sheds from the origin, which is the Flinders Ranges. It follows an underground continuous flow of groundwater. There is a chemistry kit that starts to happen where you've got this oxidising zone. When it hits carbon, it actually starts to get this, this activity, which is a redox boundary. This is the reduction area. This is where the uranium will drop out. So our soils will be taking over the top here, will indicate if these paleo channels are there, and work out where the best bits are to drill. Now, it's pretty obvious you'd be starting to drill here. In situ recoverable opportunities in the uranium space are, I think, the way to go. There are lots of good assets that are hard rock, but what we are going with is what's actually been demonstrated to be acceptable and very, very effective, lower cost opportunities utilising this technology in this terrain that we're in. We're going to have some confirmation of these results, which will actually help us delineate what our exploration program would look like for the new ground that we've acquired. We'll interpret that. We'll move forward on the basis of getting land access and delineating those exploration programs that we think we can introduce very, very quickly. We're still deciding on what level of activities we're going to take by way of the drilling. It might be a mixture of air core and or mud rotary, but demonstrated that this is the most effective in these areas. I won't talk much about our nickel, other than to say that we do have, I think, a very valuable asset. It needs to be able to demonstrate that value with a more improved set of circumstances around the nickel price. But I might add that, you know, it's gone from $15,000 closer to $20,000 in the space of these last few months. It is going to be like California screaming, that roller coaster that you just need to strap on and strap in and just go with it. You can't do much about it. People around us will dictate how valuable this asset will be, and I think it will be very valuable. Lifezone is listed on the New York Stock Exchange, and that actually owns this particular deposit. BHP's seen fit to basically put money into this as well. So we think that, unfortunately, much of the activity that will happen here will be dictated by the overall sentiment that's expressed towards nickel. But we think it's a valuable asset, and we are in discussion with parties to see whether they can join us for this journey. So those levels of project interest are available to us because we own so much of it. Every hole that we've drilled on this area, we've actually hit massive sulfides. So we think we're onto a technique that's going to work. Tanzania's demonstrated it's become a much more open and attractive mining destination, and we're seeing a lot more mining licences being issued. Snapshot, nearly 1 billion shares on issue. Pro forma cash about 1.6, and we basically see that there's some value there. We've got an experienced board, we're dedicated, we have skin in the game, and we want to see this succeed like our stakeholders. Thank you.
Thank you, Chrissy. Thank you, Chrissy, and thank you everyone for staying around for this late session. So Cooper Metals has been around for 2.5 years. Our flagship project is in the Mount Isa region, and we're a copper gold explorer. So just a bit snapshot of the company. We've got a market cap of about 9 million. We've only got 80 million shares on issue. We're quite healthy with cash in the bank at $4.4 million, so we're well funded. We've got our major shareholders are the Lao Resources Fund and Iwella, which is a great endorsement for the company. And we've got 3 main projects, 2 in Queensland around Mount Isa and 1 in WA, the Guru project. I'll mainly be talking about Mount Isa today. We've got a small board of 3, a mixture of finance and geology experience. I've got 30 years experience in mining and exploration and copper gold space, mineral sands, industrial minerals and other commodities. So there's 4 main reasons that we really like the Mount Isa region. We do have a very large project area, over 1,600 square kilometres, and we're surrounded by some really good neighbours like Carnaby, which have demonstrated that there's some good mineralisation. They've delineated around 20 million tonnes of copper gold ore just in the last 12 months or so. And it's very highly prospective, as you can see with these recent discoveries by Carnaby, by Hammer Metals and ourselves. It's a strong mining district. You've got the Mount Isa mines, Ernest Henry, Eloise, you've got True North, so there's several mines in the area and infrastructure as well. There's great potential for growth for Cooper Metals. We've got over 50 targets that we've delineated in the last 2.5 years, and we're systematically working through those targets. Just briefly on Brumby Ridge, so we were very excited late last year when we got a great intercept of 71 metres at 2.8% at Brumby Ridge. We did a few holes around there late last year, then we paused during the wet season and we came back this year and did some follow-up work with the diamond drilling, etc., and some more RC. Unfortunately, the diamond drilling came up and we hit some narrow zones of mineralisation, and I thought I'd spend a little bit of time explaining that. So you can see in the plan here that the pink zones there are some narrow zones of quartz carbonate copper mineralisation. And when we did our initial holes, this is a little bit busy, but when we did some initial holes in 2023, we, by fluke, basically went down some east-west trending zones of mineralisation, what we're calling mineralised fault breccia zones. So the geology is really heading in this northwesterly direction, but there are some on echelon fault systems that are crisscrossing that mineralisation, and we were just fluky enough to hit those. Now, those narrow mineralised zones that head in an east-west style of direction are around 5 metres wide. Is there enough critical mass there at Brumby Ridge? I'm not sure. There needs to be more work done in that area. Just showing you in section there, you can see in section that we've done quite a number of holes in that area, quite a lot of diamond holes. The main 2 veins that you can see there are vertical. They gave us a really good IP anomaly and a good geochem anomaly at surface. And that white sort of blob in the middle is this narrow fault breccia zone that we managed to drill down late last year. Now, the positives that have really come out of this is that we know that there's a strong hydrothermal system along this fault. So there's a fault system running up here that goes for about 30 kilometres. Brumby Ridge is sitting right there, and there's a good hydrothermal system along it. There's also a number of other prospects in this region, all within 10 kilometres of each other. Now, this year we've been out there, we've already been doing about 4,000 metres of drilling and a lot of soil sampling. So we're targeting these main structures through here with soil sampling using a portable XRF so we can rapidly screen the area, and we're generating targets as we go. Now, in April, we just finished a 2,000 metre drill program, 12 RC holes. Those assays or samples are in the lab, and we should be getting those results shortly, so I can give an update to the market about that. Just briefly covering off on some of those. Mayfield Sweat South, which is only about 5 kilometres from Brumby Ridge, does have a very strong soil anomaly that goes for about 500 metres there that you can see in plan. We did some initial drilling there in 2023, and we had low-grade mineralisation from surface up to 65 metres at 0.34% copper. We thought this was really quite interesting. Where's the copper coming from? There is a coincident VTEM anomaly there. So we've done 3 more holes in that area, 500 metres, testing underneath that, and those assays should be out shortly. Similarly, Matrix West North also has a coincident geochem and VTEM anomaly. We've done 4 holes there with assays due shortly. And our Raven prospect, this plan here shows the geochem anomalism in that area. It's quite extensive. Now that Raven was discovered with our VTEM program, that's an airborne EM program that we did last year, and there's mineralisation at surface, and our initial drilling in 2023 did hit some economic intercepts like 10 metres at 1.3, 15 metres at 1, and some good gold grades there. Now this is quite a shallow plunging chute, and we did a downhole EM survey late last year, and that indicated that there was an off-hole EM anomaly, which you can see in this section. So this is a long section. This is the area we drilled in 2023. The downhole EM anomaly is here shown in pink, and the idea is to test this downhole EM anomaly, which was quite strong. So we've done some drill holes there, and we'll have those results due out shortly as well. Last prospect that we just drilled recently was called the Yarraman. It's a coincident geochem and IP anomaly, and we've just sunk a 200-metre hole into that to test the guts of that IP and geochem anomaly. So you can see we've got a number of targets to follow up on. In our northern part of our tenure, up near the Barbara deposit. Now the Barbara deposit was a 5 million tonne copper gold deposit, and it has a VTEM signature. Now we did a VTEM survey through our tenure in here in 2023, and we highlighted 10 different VTEM anomalies. Now 3 of those look very promising, and the geophysicist has modelled some robust plates of EM anomalism, which started about 40 to 50 metres below surface. So we'll be drill testing those later this year. So over the last 2.5 years, we've been building a pipeline of targets through our 1,600 square kilometres of tenure. We're rapidly assessing those in a systematic way, and we'll be continuing to drill throughout 2024, testing those targets. Just one other project we've got in the Cloncurry region, which consists of 2 tenements. It's not far from AIC's Eloise mine, which is a high-grade copper-gold deposit. Now this map shows a magnetic map on the left, and we've got the geology on the right. You've got the Eloise deposit here, and there's a number of other deposits like Jericho that was recently discovered by D Metallica that's now owned by AIC Mines. Now Jericho has an EM anomaly associated with it, and this area is undercover, so the rocks don't outcrop its surface, and EM is the main tool when you're looking for these style of deposits. Now, our tenement through here, shown in white, is in a very prospective region at the contact between the Mount Norma quartzite and the Tool Creek volcanics. So we intend to do some more EM there and then drill test any targets. But I really like this area down here where there's a strong magnetic anomaly. It's only had 1 drill hole there by BHP. They never explained the magnetic anomaly, so we'll be doing some EM there as well to test those targets. Just quickly, our Guru project in WA, it's an early greenfields project. It's not far from Silver Lake Resources' Deflector deposit, which has over 1.2 million ounces of gold. We've identified 5 gold anomalies in that region through several phases of soil geochemistry. So we're just going through the approval process that we can follow that up with aircore and RC drilling as well. ESG, we take that very seriously, and we have a strong focus on environment and community and our stakeholder engagement. So just lastly, the 4 main points I'd like to bring up. I've just mentioned the copper price now. It's now touching $10,000 a tonne, so that's exciting for all of us copper explorers and producers. We see significant share price growth potential with our numerous targets that we have, and we have a healthy budget to follow these up with over $4.4 million in the bank and a very busy program for 2024. So look, if you want more information, please come and see me at the booth. Thank you.
Thanks very much, guys. So we're going to be talking about terra uranium. We're in the Athabasca Basin in Canada. Yep, that's all. You've all read that? That's good. A quick snapshot of who we are. We're uranium people. We know the business back to front. We've been doing it for a long time. We deal very closely with the First Nations people. We're operating under treaties in Canada. It's not very different to what happens in Australia. We're in the Athabasca Basin in Canada, which has the largest and highest grade mines in the world. We've advanced our projects since listing 2 years ago to being drill ready, and we're in the process of looking for partners to drill those. And we're closing the acquisition of a new project a little further north, which has a defined resource. It's under the Canadian system, 43101, and we'll be bringing it into the JORC system, and we've got significant growth in the future, as everybody says. A little bit on our background. So we listed in September 2022, ASX codes T92. 92 is the atomic number for uranium, for people who don't know that. Shares on issue 67 million, so it's very tight. Share price around 15, we're a little lower than that today. Market cap at 10. We've got sufficient cash. We've just done a raise recently, and very, very tightly held. So the top 20 shareholders, including the board, hold about 60%. But I really want to highlight the little figure at the bottom right, which is that 73% of all the dollars we've raised have gone into the ground, into hard exploration, because that's where we're going to have some success in the future. Just looking across the board, myself, Doug Engdale is a Canadian based in Saskatoon, in Saskatchewan. Dr. Kylie Prendergast, an explorationist of world renown, and Hayden Lynch has recently joined our board because we realised we're all geologists and we needed somebody with a bit of corporate background. Mike McClelland is ex-Cameco, ran the exploration programs for Cameco in the Athabasca for many years. We managed to bring him out and asked where we would go to find the next major deposit, and that's what he's busily doing. I guess the emphasis here is that our operations team are Canadians based in Saskatoon, not in Vancouver or Toronto, and they know the people, they know the ground, and we can get rigs and we can actually do things. We mentioned the First Nations people. It's very important in Canada. If you don't have a good arrangement with them, you won't get on the ground. We did that from day one. Why we're in the Athabasca? It's pretty simple. It's got the biggest deposits in the world. It's an area, though, that's been explored extensively, but not at depth. So our targets are mostly a little deeper in the basin. And our Aim Lake project, which we're in the process of picking up at the moment, is at the other end of the spectrum. It's a bulk low-grade deposit, but we were really targeting deposits that can operate at an all-in sustaining cost of $20 a pound US or less. That's $20 when the current price is 94 last night. That's to give you an idea of our framework and our exploration framework. Our technical team is extremely strong. Geophysicists, geochemists, geologists, and we are looking for deposits that are around about 800 to 1,000 metres deep. That unconformity situation in the Athabasca is unique in the world. It's some very interesting things happening there. We can have deposits that are running from 15 to 25% uranium. In other words, a quarter of the rock is a uranium deposit. There's nowhere else in the world like this. This is where we find the giant deposits, which is why we targeted straight in on that area. You'll see the methods we're using from surface to depth, geochemistry, including helium, VTEM, which is a shallow EM method, ANT, which we introduced from Australia, so we brought that from South Australia and proved it in the Athabasca Basin. All our major competitors are now picking it up. It's very, very good at mapping the detail of the unconformity, and we're looking for those structures in the basement, and then the deep-seeking ZTEM, which was the main method in the past. There's a little map there on the right which shows you, I think, quite clearly why we are where we are, and it's a very large package we have. We generated all those projects ourselves. They're 100% owned. We peg them, and we've used our IPO funds to bring those through to drill-ready targets. I'd highlight the major zone on the right-hand side there, the yellow and brown zone, which includes deposits like MacArthur and Cigar, which are at the unconformity, 675 million pounds in one deposit, averaging around 20% uranium. Cigar is the other one at 350, which averages about 25% uranium. These are very, very rich deposits, but with that grade, they are very small. That's what it looks like when we're out there on the ice. It's a very harsh environment to operate in, and therefore it's expensive. That's an ice road across Passfield Lake. We also work in the summer program, particularly with the geophysics, and again, it's all helicopter based. It would have minimal impact on the environment. Our new project that we're just in the process of closing on Aimer Lake has a defined resource, £15.3 million. The fine print down the bottom says that this is Canadian compliant, NI 43101. It's not JORC compliant. Don't ask me why. You can later on, I'll explain it to you. Passfield Lake is just focusing on the area. That little anomaly there is showing that we can very clearly map the basin using Australian technology. We're very proud of that, and as I said, it's been picked up by all the other people in the basin and now proven on the Hurricane deposit by ISO Energy. That's what the Passfield target looks like. You can very clearly see the basement anomaly there, and we're getting some very interesting structures. It looks like we can see the actual structures in the basement as well, and that bit of a cloud sitting over the top of it is actually alteration in the sandstone, which has a slightly different velocity. So ANT is a seismic method. Parker, where we drilled our first hole and proved that two things. One, that we can target in on the mineralisation, and we got some at depth, and secondly, that drilling in the Athabasca at these depths is very expensive. Hawk Rock to the north, a big dispersion train at surface. We are doing some more work on that this coming summer season. Portfolio, because we have people on the ground, we're able to pick up vacant ground, which is very hard, and we've just picked up a couple of new projects. These are grassroots, so we'll build those up over the next couple of years. Aimer Lake, which we were talking about, very large dispersion area, and as we bring this resource up to JORC standard, we'll focus it first and then expand it. Quick thing on the investment highlights, we have 18 drill-ready targets in the Athabasca. We own them 100%. We've got the largest land holding on the Cable Bay Shear Zone, which is now completely pegged out, all surrounding us. All the companies surround us are 10 to 100 times our size. We've picked up some resources in the Aimer Lake area. Companies very tightly held, and we're on the cusp of further growth, along with the major rise in the uranium price, which is coming. As I said, it's consolidating now, and it'll be around the 150 mark by the end of this year. Thank you very much.
All right, thanks, Chrissy. Yep, 3 projects in 10 minutes, so hang on to your hats. Junior exploration company focused on critical metals, particularly nickel sulfide, but also copper, cobalt and lithium. In order of how I'm speaking, Miriam, we're negotiating a transaction on divesting our lithium assets in what we call a nickel project in Western Australia. Mount Gilmore, New South Wales, where we've just identified a target for a joint porphyry copper deposit, never been drilled. I'll go through that in some detail. And also Lynn Lake, where we've been building, a long life, low cost nickel sulfide mining operation in Canada. $6 million market cap, active on 3 projects, so a lot of opportunities for investor with success. 2 very good cornerstone investors in Delphi, an Insto, a German-based Insto, and Blackstone, ASX-listed nickel sulfide development and exploration company. Very supportive of what we're doing. Right, Miriam. Miriam we picked up as a nickel sulfide project a couple of years ago. It's a small project just outside of Kilgardy in the eastern goldfields of Western Australia. So, discovery in 1969 of nickel sulfide, some good grades, never developed. We've used modern geophysics and we've identified probably 5 or 6 targets on that basal ultramafic contact in that area using old historical drilling and modern geophysics. At the same time, we also found some outcropping spodumene in pegmatite. This was about 1.5 years ago. We've since been negotiating with the Western Australian government to get drill permits for the nickel and the lithium. In that time, we've seen the lithium market go up and down. It's a very hot area for lithium pegmatites, and there's probably a need to consolidate. Our nearest neighbours are Future Battery Minerals, just to the south. They own the Kangaroo Hills project. They've got the head start on us as far as exploration of lithium. We could see what they were getting in their drilling. with some indication of what we would get in our drilling. The market wasn't rewarding good exploration results for lithium, and we thought we'd probably both companies benefit by consolidation. They had the head start on us, so they're funding exploration to earn 85% of the project. We retained 15% free carried until completion of a positive definitive feasibility study. So the deal is $2 million up front, $1 million in shares, $1 million in cash. They have their meeting on 20th of May this month, and that'll be that payment. And we had another $7.5 million in project hurdles as the project develops. So if we only get $2 million from this deal, we've made a wise choice in divesting the lithium. If we get all the $9.5 million, then again, our shareholders benefit by free carried to pretty much mining and also having a bag full of FBM shares. Mount Gilmore is the recent news and our immediate exploration focus. This has been 2 years in the building. It's a monster project. It's a 20-kilometre strike of anomalous copper, cobalt, gold, silver, molybdenum and a whole bunch of other metals. It's a big target, hardly any drilling. It's an early stage exploration play we've developed. A lot of high-grade mineralisation on surface in narrow structures, some beautiful rocks, but also very complex. Where do you drill? It's such a big target, and one of the mineralisation styles we found were porphyry copper, and so as a rule of thumb, juniors should never chase porphyry coppers. It takes a lot of drilling to prove up a porphyry copper deposit, and we didn't want to be in that situation. Fortunately, there's the forefront of our science. There's some really good things happening, and we engaged the University of Tasmania with funding from the federal government to do this work, and they've been looking at Mount Gilmore, and they've reduced really the target from 20 kilometres down to 2 kilometres. Interestingly, to give you some idea of scale, we drilled this project a couple of years ago, and we drilled a mineralised porphyritic rock. It had copper all through it. Where this target is 7 kilometres from where we were drilling. So that's the kind of scale. It would have taken us years to work that far north, that's for sure. The target is also, it's got some pretty good exploration results in itself. It's about a 2 kilometre long target. As I said, down from 20 to 2 kilometres. It's got a magnetic low with a magnetic high rim around it, which is something particular to these kind of deposits. It's got copper at surface. In mapping, you see disseminated sulphides, including chalcopyrite there. It's got a skarn, copper magnetite skarn within 500 metres of it, and that's usually distal to these deposits. We've also done one line of IP geophysics across it, and that's got a chargeability anomaly sitting below it. So at the moment, we're in the process of renewing our drilling permits because they've gone out of date, and this is a slightly different area where we're drilling before, of course, and we'll be drilling this hopefully, if not end of June, early July, and it's quite exciting. It's a big target, and that project's about an hour outside of Grafton in northern New South Wales. Lynn Lake, we've been building this since 2010. It's an old mining centre. It's got incredible infrastructure. We own all the mining centre now. We own all the exploration ground, historical exploration ground for nickel sulphide. It's got the township. It's got hydropower. It's run for 2 hydropower stations. It's got a sealed airstrip, hospital, etc., etc. So really good infrastructure to build a project on, and quite easily. This is a stand-back geological look at the area, and the mineralisation is hosted by these purple on that geological map, but these pipe-like bodies that bring the nickel and the copper and the cobalt to the surface. All these plugs have drill intercepts of plus 1% nickel from drilling dating back to the 1940s. The main mining centre is centred on the A deposit and the L deposit to the north. It was an incredible mine for 24 years, 1 million tonnes per annum per year, and developed down to about 1.1 kilometres below surface. You can see the grade there at 0.88. You think that's quite low compared to, say, the narrow high-grade komatiite nickel sulphide deposits in Western Australia. But the average grade globally of nickel sulphide deposits is about 0.8% nickel. What's unique about Lynn Lake is it's 100% sulphide. Typically in these deposits you get 0.2, 0.3% of non-recoverable nickel silicates. This has none of that. So in theory, we can recover 100% of this mineralisation. So it relatively is high grade to the 0.8 global grade. This is a cross-section through the mining centre. The purple, I guess, polygons there are outlines of the mineralisation at a 0.3% shell. This is what we want to mine. So we want to mine those large bodies of mineralisation, fairly continuous, large-scale mining. We don't state the resource at 0.3, but there's about 50 million tonnes plus of material mineralisation within those mineralised envelopes as defined there. We report our resource at about 0.5 at 16 million tonnes only. So there's a lot of scope for size at Lynn Lake. The mining concepts we're working on, and this has been going on for almost 2 years now, and so we're well advanced in this. We're at the end stage. We're doing the detailed scheduling and mine planning for it. It's working on a 1 million tonne per annum flotation plant. It's got a production shaft. The old shaft is there. We can refurbish that from 1 million tonne per annum up to between 2 and 3 million tonne per annum. It's centred on the 1 million tonne flotation plant like it was historically, producing about 10,000 nickel tonnes and about 5,000 copper tonnes per year, and a plus 15-year mine life. What else can I say about that? We've fully integrated our proposed development in with the historical development, and that saves us about plus $50 million in development costs going forward. This is where the big inroads have been made, processing, and because we've got so many tonnes, it's something we can really play with. There's 2 feed streams we're looking at. One is the run-of-mine, ROM, and that's plus 0.6% material. The other is low-grade material plus 0.3, 0.35 that gets upgraded through a different circuit and then put into the flotation plant. With these grades, as I said, it's also sulphide, but these are also the geological and statistical domains. So the plus 0.6 is your high-grade domain at Lynn Lake, and that would probably average between 0.8 and 1% nickel, depending on where you are in the system. The low grade is also a geological domain, and we can upgrade that to plus 0.8 before it goes into flotation. Just quickly, nickel price is good. Only 3 times in history has the nickel price been better than where it is now. You need to be making money at these nickel prices. And as a rule of thumb, $5 US a pound is where you should be targeting. That's where we're targeting Lynn Lake. You can see that on that curve there. The base of the nickel price has been dictated by the nickel laterite miners. We need that material. We need nickel laterite to feed into Class 1 nickel. There's not enough Class 1 nickel, and we need low-cost batteries, low-cost nickel to give us low-cost EVs so people buy them, and that cycle continues. So we won't talk about that. 3 projects, very active. Watch this space. Thank you very much.